Hello and welcome to another episode of the Academy. On today's episode, I have a very interesting guest with me. It's a financial advisor at Graeme Blaque, focusing on risk management using derivatives. With me is Mr. Zeal Akaraiwe. It's great to have you with us on the Academy. Good morning. First of all, I'm going to be asking you, is Nigerian economy with a high inflation rate of 9.2%, how does this affect Nigerian businesses?
I think that we had a target to drop our inflation rate from double digits to single digits, which we have managed to achieve and sustain for a couple of years. But in terms of the inflation rate staying within single digits and the effect it has on the average Nigerian or the average business, I can't tell you I know the direct correlation, but it's just in terms of the metrics of the economy, it's seemingly good to have a low inflation rate. However, personally, I think that for the level of development of the country regarding infrastructure, it is counterintuitive to expect infrastructure to develop, because that means you need to do a lot of governmental spending, and a lot of governmental spending will generally drive inflation. So I don't know how it is that we would want to have a very low inflation rate but expect a very rapid growth in expenditure and infrastructure. So the absolute figure of the inflation rate, for me, is not a very relevant metric outside the other parameters that are being managed.
Great. Secondly, what exactly is the effect of the Naira devaluation or depreciation on businesses in Nigeria?
That's a lot more straightforward. If you devalue the currency, everything becomes more expensive. But that's because we are a highly import-dependent economy. Now, if you ask my personal opinion, if you look at the budget for 2015, the year is almost gone. I don't know how much of the budget has been implemented. We were at about 4.5 trillion, which was done with an assumption of an exchange rate of 165. Now, oil prices have dropped significantly. We're talking almost a 50% drop. So our revenues, oil represents about 80-90% of the government's foreign exchange earnings. So we are not in the best position. And if all our revenue, a lot of our revenue is coming from exports, with the currency staying very strong unnaturally, and I need to emphasize unnaturally, I cannot see the benefit to anybody. The truth is, where the central bank is transacting on dollar naira right now is very close to 200. The parallel market is in the region of 230 to 240, even though the cash black market, what the malams do, is maybe anywhere between 205 and 220 because of the new policy that you cannot lodge cash. Now, in terms of the impact it has on businesses, as long as you're importing and you're earning local currency, then it's going to have a very bad impact on your business. However, if you are an exporter, then it makes much more sense for you. The more they devalue the currency, the more local currency you have to spend. Now, so for different businesses, it has different impacts. And so for the average Nigerian who consumes a lot of imported goods, it means that his cost of living is going to go up. Now, even those that do not consume imported goods are going to feel the effect, because those who are spending more would have to transfer the cost. So transportation costs will go up. Even for the person who produces everything locally, if his cost of living goes up, he's going to translate that into the price of his own goods. So it's going to raise inflation, certainly. But the question is, can we afford not to devalue the currency? That's the real question. So we are at, give or take, 200 officially. With oil prices where they are, with oil representing a major amount of the government revenue, can we afford not to devalue? Will our oil receipts for 2016 be enough to meet our budgetary expenses? I don't know.
Okay. All right. Also focusing on the current interest rates of the CBN, which is at 13%. looking at your personal assessments, do you think this should be reviewed as well as it affecting businesses in Nigeria?
Again, what does 13% mean, for the average business vis-a-vis what the commercial banks are doing with the business in relation to what the MPR, which is what I believe you're referring to? The correlation is, in my opinion, negligible, because the average business in Nigeria is borrowing above 20%. When I say average, I'm talking about your SMEs. The very large corporates will be borrowing mid-teens, late teens, but the average Nigerian, if you walk into a bank as an SME and you want to borrow, you're going to be talking anywhere between 22 and 26%. So the MPR rate is not a rate that is translated into the average Nigerian, or rather into the average Nigerian's expenditure. So again, interest rates generally in an economy are market driven. And with the president's pronouncement of enforcing the single treasury account, you are going to find that will affect liquidity in the system. If liquidity in the system is affected, interest rates will rise. So whatever your MPR rate is, the market rate will rise once the liquidity leaves the system.
Okay, finally, looking at the future of Nigerian economy, what would you say the future holds for Nigerian businesses?
The future is yet to come.
Okay, but looking at your projection in terms of what the economy is facing right now, inflation, interest rates, what would you project as would affect Nigerian businesses in the future, 20 years from now?
20 years from now? Wow. Okay. We'll be here. That I can guarantee you. There'll be businesses in Nigeria. Businesses will do well in Nigeria. We've gone from when the exchange rate was less than 1-to-1 to where it is now. Businesses will come, businesses will go. There are many factors affecting businesses. One thing about the average Nigerian, as well as the average Nigerian businesses, we are resilient. We would adjust, we'll survive, and we'll move on. Some businesses will fall off, some businesses will not. Now, having said that, the more important thing, I'm not going to go as far as 20 years. I have no idea what's happening 20 years. But 2016 will be a very important year. Reason being, as of now, we do not have any ministers. We don't have a cabinet. And so the economy is being run almost on autopilot, more or less. By the time we have a cabinet, then you're going to be able to give some indication as to clear direction. President says the cabinet will be appointed anytime from September. So if they're coming in September, by the time they settle into their portfolios, we're in October. Let us honestly discount December. October is budgeting season. So between October and December, I would expect that their focus would be on getting the budget right for 2016. So personally, I'm discounting 2015. 2015 did not happen in Nigeria. We just changed government and that was it. So 2016, so if you appoint your ministers, depending on the caliber of people that are appointed, it then becomes easy to project what type of things they will do in 2016. And then when you look at the budget. Now, with oil prices where they are, with us still being heavily import dependent, with the central bank taking, in my opinion, less than desirable effects to manage the economy, 2016 will be very tough. Unless the cabinet or the economic team have a very strong grip on what they ought to do and have the presidential or the willpower to get it done. So 2016, I think, will be a year where everybody will need to readjust. Not many businesses have done much in 2015. So 2016, everybody will need to adjust, and I think there should be a lot of stimulus injected into the economy in 2016 for things to jumpstart.
All right, thank you very much for being us on the Academy, Mr. Akaraiwe. It's been great having you. Well, that'll be all on the Academy for this week. I hope that's been very enlightening for you. That brings us to the end of another episode. Don't forget to keep the date with us next week and join us on our social media platforms, Facebook and Twitter. Till then, thank you very much for watching. Bye for now.